All right, mic check 1 2 1 2. It's your boy and Billy. What is you gonna do? Yeah. All right. So before I get started, let me just make sure that my sound is good. Making sure you guys can hear me before I start. If you don't know how many times I did a video, and you guys did not hear me. I did a live, I did a video, and you guys did not hear me. Okay, so right now you guys cannot see my screen. Okay, so right now you guys cannot see my screen. Okay, so right now you guys cannot see my screen. All right, look like we live. We ready? So this will go to the trade recap. This is the trade that I took. Let's put on the executions. Wonderful trade, man. Literally marvelous trade. All right, for some reason it's not popping up. But anyways, so like I said, we usually expecting it to be bullish, right? So if I'm expecting it to be bullish, I want to see a sweep, right, on the downside, or I want to see a move to the downside, right? Because in order for it to go higher, you want to see it go lower first, right? You want to see probably an accumulation, right? Accumulation, manipulation down, and then distribution up. So that's what I was looking for it to get. You see here below, so market opens right here, right here. We trade down, right? We trade down into this higher time frame PD rate, right? If I go to a daily chart, you go to a daily chart, you see how we tap into this higher time frame inefficiency, right? We have a volume imbalance right here because this candlestick closed here and it opened here, so that's a volume imbalance, right? And then we have a fair value gap right here. So we have a volume imbalance coupled with a higher time frame PD rate, which is that daily fair value gap. So I was expecting a sweep, and then we got sell side right here. We had a scoot all the way down. You see right here, we had these sell side right here, right? This low right here. So that's why I was looking forward to sweep. You see, we swept that low right here. Okay, so we tap into that area. Now, right, we gotta move down into a higher time frame Peter rate, sweeping out those lows right there. Right. So now I'm looking for bullish order flow. Right. The first sign of bullish order flow is this first change in the state right here. So you see how we got this down close candle, right? Down close candle, and we got an aggressive close above, leaving a small little fair value gap right here. Right. So that's a order block. So I was expecting it to come back down to this to catch along. And then we have this CB right here that I'm expecting it once it gets above to get used as a inverse fair value gap. So that's exactly what happened. So we come down, I get my long right here, right? I get my long literally right there. And then if you want to watch this video, is I literally recorded it on my YouTube shorts. So you see, I get my long literally right there as we trade into the inverse. We rally away, another down close candle, rallied away. It literally ran so fast. Like I was just so happy that I was actually in this trade. This is actually the first winning trade of the week for me. So right here we have a so once it got above here, we had a low high, lower low. Once it closed right here, higher high. So you get the consolidation. And I bought another contract here and I was targeting these midnight open. I mean this 8:30 open. And you see right there. So I caught about 140 something points. It was an amazing trade, nice and quick, right? And then that's it. I was done for the day. That's my trade recap. We got because I was expecting this to be bullish, right? Even though we got double high, I was expecting this to come up here, but price actually didn't go up there. That's why I actually took my profits at the 8:30 open, because you always want to sell some at 8:30 open or at any liquidity zone or any key level. So that's why I sold it right here, and I bought it here because I didn't really know for a fact, but because of bullish order flow, because of the bullish breaker, because of 830 open, I knew for a fact, not for a fact, but I kind of just knew it was at least go to the 830 open. That's why I bought one more. I scaled into one more contract right here, and I have my stop loss below this wick, below this order block. You see how it never came down because good bullish breakers, right? The good breakers, once it comes up and close above, you want to see it stay in the upper half. Look at all of this accumulation in the upper half. And then we get the pop up, boop, TP. So I appreciate y'all tuning in, and I catch y'all on the next one. This was a quick little fast one, right? This was a fast one, right? But it is okay. So Monday took a loss. Tuesday took another loss. Wednesday, I took a loss, but it was actually a win because I literally closed the position because it was being a little lethargic, being a little slow, and acting like it wasn't ready to run. And it literally, the moment I got out, after like 3 minutes, 4 minutes later, it literally ran to my take profit. But it's okay because you gotta learn. You want to learn from your mistake. You want to constantly learn from your mistake, constantly, constantly. Like the other day, I took that first loss, right? Because why? I got out of the trade early, and as I was getting out of the trade early, I knew. But I got out of the trade because honestly, I didn't like the way it was moving. It wasn't disrespecting things, right? It was actually holding everything it was supposed to hold, but it was just being a little too lethargic, right? And that would made me actually get out, second guessing myself, stuff like that, telling myself it's taking too long. It's supposed to be speed right now. All of these things. That's why the psychological part of trading is actually the most hardest part of it all because you can actually trick yourself out of the play, or you can like talk yourself into a play, talk yourself out of play. So many things. That's why mastering your psychology is key. Is key to trading. So done for the week. Only got one. Matter of fact, let's go look at it because there's no way I should be down. But this is the paper trading. Oh, there you go, right? You see, there go the executions. So you see how. So there go the executions right there. So let's share my screen right quick so you can see my execution. See if I got long. So you see how I got long literally right here. So let's break this down one more time since we see the executions, right? In order, I'm expecting it to be bullish, right? So in order to be bullish, you want to see it go down first, right? So I didn't know it was going to go down this low, but this was a key area that I did have on my chart. So when price opened here, we literally just really went in one direction all the way down, right? Literally tapped perfectly, perfectly into my key zone. Now I'm looking for bullish order flow, right? Because I'm looking for it to come back up, right, and have a retracement back up. So the first thing I see here is a CB. So I'm expecting. So once I get above this CB, I want to see it get used as an inverse, right? But before, right? But before we actually get up there, we want to see bullish order flow down here, right? So we come up here, we come down, we create a bearish candle right here, right? So once we close above that top wick, and you see how it leaves a small fair value gap right here. So this is a order block coupled with a fair value gap. That's a high probability change in the state, aka order block. So I was expecting that's why I have this. And the most sensitive part of the order block, right, is from the opening price to the top wick. That's why I have it notated here. So once it would have came down, I would like for it to see it come down and hold support, right, and to bring it up higher, right. So that was my first area. Okay, where what I wanted to see. You see how it never came back down? It left it as a breakaway. That's Now, I'm seeing that as okay, we are literally in a hurry to get to the highs, right? I mean, to come up here. We're in a hurry. So that's how you know if you're on the right side of bullish order flow. If it leaves breakaway gap, if it leaves fair value gaps that don't get mitigated, right? So if this is a fair value gap, right, and you don't see price, because usually you want to see price what come into it and then leave it, right? But if you see price don't come and touch it and it just leaves it, that's letting you know that it's leaving fair value gaps behind. That hasn't been traded into, and that's what you want to see if you're actually extremely bullish, right? You want to see it. You don't want to see it come back and touch them like every single inefficiency. You want to see it leave these fair value gaps open to let you know that you're on the right side of order flow, right? Look at this fair value gap. Look how this fair value gap stays kind of open, right? Majority of it stays open. That's letting me know that we're in a hurry. So once we get above here, sorry, hold on. So once we get, we get the down close candle, we get the order block. Once we get above here, now we literally just disrespected, right? This bearish fair value gap. Now I want to see it get used as the inverse. So you see, the moment it came, because why? I'm not expecting it to come down here, right? I'm not expecting it to break through this inverse. So that's why the moment it came down, I waited for a second as it was leaving up. I bought it and I got my long literally right there. As you see, it literally ran all the way up. So right here we have a bullish breaker because I was looking for it to come back down, right? To come back down so I could scale it into another contract, right? So once we get way up here, we have a breaker, we have a low, high, lower low into a higher time frame PD rate, higher high. Once it closed right here, you see I bought it because why? This is a bullish breaker. It's and it left all of these unmitigated zones. So I knew for a fact that not for a fact, but I kind of knew because of it's leaving these openings here that it's extremely bullish, right? It's in a hurry to get to the liquidity to these premium prices. So that's why I bought one right here because I knew it was going to go 8:30 open. That's kind of risky. It's a little bit more of an advanced move, but I bought it and look how price literally stayed in a bullish breaker, right? You want to see price action stay here. You want to see it stay in the upper half, and then boom, we get that pop. And that's how I, you know, got my trade. It was a marvelous trade. I think we called it like 140 points. I got long at what 25. 25 is right there. Got long at 25. So you see, I bought it before that down close candle even finished forming. So it was a perfect buy, and I call it at got out right here. So about 145 points. You see, I bought another contract right there. So I bought one here, bought another one here, sold both of them here. What a lovely trade, right? So that was a lovely trade, man. So yeah, he said, smoking kills. Blank screen, bud. You don't see my screen? Damn, I hope it wasn't a blank screen the whole fucking time.